It is important for the Income Tax Department to determine the residential status of a tax-paying individual or company. It becomes particularly relevant during the tax filing season. In fact, this is one of the factors based on which a person's taxability is decided. Hi everyone, I am Bhavna from ClearTax. Let us today explore residential status and taxability in detail. So, first, let's understand what is residential status and why is it important. The taxability of an individual in India depends upon his residential status in India for any particular financial year. The term residential status has been coined under the Income Tax Law of India and must not be confused with an individual's citizenship in India. An individual may be a citizen of India but may end up being a non-resident for a particular year. Similarly, a foreign citizen may end up being a resident of India for income tax purposes for a particular year. Please note that the residential status of different types of persons, that is, an individual, a firm, a company, etc., is determined differently. So now, let's learn how the residential status of an individual taxpayer is determined for any particular financial year. The income tax law in India classifies taxable persons as number 1, a resident. A taxpayer would qualify as a resident of India if his stay in India is 182 days or more, or his stay in India for the immediate 4 preceding years is 365 days or more and 60 days or more in the relevant financial year. In case an individual who is a citizen of India or a person of Indian origin leaves India for employment during a financial year, he will qualify as a resident of India only if he stays in India for 182 days or more. Such individuals are allowed a longer time, that is greater than 60 days and less than 182 days, to stay in India. However, from the financial year 2021, the period has now been reduced to 120 days for such an individual whose total income exceeds rupees 15 lakh. In another significant amendment from financial year 2021, an individual who is a citizen of India who is not liable to tax in any other country will be deemed to be a resident in India. The condition for deemed residential status applies only if the total income exceeds rupees 15 lakh and nil tax liability in other countries or territories by reason of his domicile or residence or any other criteria of similar nature. Number 2. A resident not ordinarily resident, which is RNOR. If an individual qualifies as a resident, the next step is to determine if he is a resident ordinarily resident or a resident not ordinarily resident. He will be a resident ordinarily resident if he meets 2 conditions. He has been a resident of India in at least 2 out of 10 immediate preceding years, and he has stayed in India for at least 730 days in 7 immediate preceding years. Therefore, if any individual fails to satisfy either of these 2 conditions, he would be considered as a resident not ordinarily resident. From financial year 2021, a citizen of India or a person of Indian origin who lives in India for employment outside India during the year will be a resident and ordinarily resident if he stays in India for an aggregate period of 182 days or more. However, this condition will apply only if his total income exceeds rupees 15 lakh. Also, a citizen of India who is deemed to be a resident in India with effect from financial year 2021 will be a resident and ordinarily resident in India. Please note, income from foreign sources means income which accrues or arises outside India except income derived from a business controlled in India or profession set up in India. Number 3. A non-resident. An individual satisfying neither of the conditions that are applicable to be a resident and a resident not ordinarily resident would be a non-resident for the year. So now, let's look at how taxability varies depending on the category of a taxpayer. A resident will be charged to tax in India on his global income. That is, income earned in India as well as income earned outside India. A non-resident and a resident not ordinarily resident's tax liability in India is restricted to the income they earn in India. They need not pay any tax in India on their foreign income. Please note, in case of double taxation of income, where the same income is getting taxed in India as well as abroad, one may resort to the double taxation avoidance agreement that India would have entered with the other country in order to eliminate the possibility of paying taxes twice. In case you need help in checking your residential status, please access our residential status calculator page. You can find the link to this calculator in the description box below. If you like this video, please do like, share and comment, and do not forget to subscribe to our channel so that you get notifications every time we upload a new video. Stay tuned for more updates.